to Looking at the Markets with David Modell. Today's theme is Are You Feeling Lucky? There's an old Clint Eastwood movie, a really good one, where he asks, Are you feeling lucky? And I've put up a picture of, it's an old cliche, but I think it holds true today. It's picking up pennies in front of a steamroller. Is it a good idea to pick up pennies in front of a moving steamroller? Probably not a good idea. But a lot of people do it in the markets and in the options, in the world of stocks and options. People do it all the time. And I don't think they know that they're doing it. You see, if you're going to sell options, whether it's selling puts, selling calls, selling put spreads, call spreads, iron condors, straddles, strangles, whatever you're selling, the time to do it, believe it or not, is when volatility is high, not when volatility is low. You see, right now, and today is the 8th of September, 2016, and if you look at the Bollinger Bands, they are squeezed about as tightly as I've seen them squeezed in a long time, and they've been tight for quite a while now. And even if you ignore the Bollinger Bands, you can see that and this is the SPY, the Spiders chart, which tracks the S&P 500, and you can see that it's been sideways with a slight upward drift for a long time now. It's really within a tight range, and that means that volatility is low. The market, or the volatility, the VIX, I should say, it's in the 12s right now, and that's pretty low. Yes, it's gone lower than that historically, it has, but 12 is pretty low for the VIX. And if you're thinking about selling puts, calls, or any options, you're not going to get much money. You're not going to get a big premium for selling your calls and puts. You're going to get very little money. And that goes back to picking up pennies in front of a steamroller. What I mean by picking up pennies is that the volatility component of the options prices is going to be very low. And what do I mean by the steamroller? I mean that when the Bollinger Bands have been this tightly squeezed for so long, the longer it's been squeezed, the more likely a breakout is to happen. In other words, if the Bollinger Bands have been very tight for a long time, very close together, that means that a breakout is more and more likely to happen as time goes on. So you're going to get very little money, and you'll be taking on a lot of risk if you sell options right now. Alright, so let's take a look at some actual option prices. And again, this is for ticker SPY. Let's say you wanted to go a month out. Okay, so it's the 8th right now, and we're going to look at some October 7th calls and puts. And the market is down a little bit now, but not much, which is pretty typical of the price action lately. And let's say you wanted to sell some 210 puts a month out. You would get less than $100 for that. You would get around between, let's say, $85 to $88 per contract. That's not very much. For the next month, you'd be locked into this contract if you held it to expiration. Okay, and of course you don't have to hold this kind of contract until expiration, but I'm just saying that theoretically you'd be in this contract for a month. For what? For 85, 86, maybe $88? That's not a lot of money. And that's a 210. Could it go below 210? It certainly could. It easily could in the next month. That's from 218 to 210. That's a 4% pullback. So that's not a lot of protection here. Let's say you wanted to sell some calls. Okay? Let's take a look. Let's look at some 222 calls expiring 1 month out. You would get a grand total of $44 or maybe $45. And again, that's if you held it until expiration for a month. And could it go above 222 in the next month? Of course it could. It easily could. That's what, 2% away? Less than 2%. So this might be worth it if you would get more premium, if it was a couple of $100. But for 44, 45 bucks, is it worth it? I don't think it is. And that's just a couple of examples. I could give you lots more examples. But no matter what stock you look at right now, it seems like every stock out there has low implied volatility. And I'm referring to mega cap stocks now. I'm not referring to, small caps. So you're not going to get much premium for it right now. So before you think about selling puts and calls because the market's not moving much, I urge you to reconsider. Wait until volatility picks up so at least you're getting something in return for the risk that you're putting on, or the risk that you're taking on here. So if you'd like some help with how and when to buy puts and calls, or just help with putting together a trading plan or investing plan, I can certainly help you with that. My name is David Modell, and my email address is davidmodell@gmail.com. If you like this video, please give it a thumbs up on YouTube. You can leave a comment. I like your comments. And subscribe to my channel. That way you can receive the latest updates so you can learn about new financial topics, because I'm always trying to put new educational content out there for you. So thank you so much for listening. I hope this was helpful, and I'll talk to you soon.